Yeah, so we'll just get straight to it, right?
Sure.
All right. So I trade a little bit different from usual. I mean, my strategy was personally developed by myself. So it's not like supply and demand, support, resistance. Okay. So it's going to be a bit
Yep.
different. So you need to pay attention to what I'm going to be teaching. So, but before we get started, I want us to settle one part, which is very important, which is leverage, how to use leverage. Okay, which is very
Okay.
important. A lot of people don't understand how leverage works, and leverage can
Yep.
be the most dangerous thing in trading because the more leverage you have, it means the faster you can lose money. So there's this thing that says, friends don't let friends use margin. Okay, so yeah. So unless you understand how to trade professionally, I would suggest you stick to a leverage of 1 to 3 to 1 to 5. Okay.
Okay.
So that actually will restrict you from taking more trade than you should. So after this class, you're going to open a demo account. So I want you to open like maybe 2 or 3, maybe put one on leverage of 1 to 5 and then one on the leverage of 1 to 10. And you're going to
Okay.
see practically how affects your risks and how you're able to take more trades with more leverage, but then how that also increases your risks of losing your capital because usually traders tend to be focused on one direction. Like once they're selling, they just keep looking for sell and they keep convincing themselves that this is direction I'm going to keep trading, right? So not
Yep.
having a very good leverage can lead to over trading, but having a very good leverage can, once you exceed a certain limit of capital that can be allocated to you, you can't take any more trades. Now that doesn't mean your capital is gone. It just means you can add more positions. So that way you're able to protect your capital and then also your emotions from over trading because trading is a very emotional business. So you can't detach yourself. So what you do is you set in rules and parameters that make sure you don't overtrade, and then you make sure your capital is always safe. Okay. So unless you
Mhm.
get to a point where you know how to trade very well, I'll suggest you stick to leverage of less than 1 to 5 or 1 to 10 maximum. But for the next couple of weeks, you're going to be practically trying those leverages so you know which works for you best, right?
Okay.
So
Yep.
though a demo account is not, it's not like a live account, but the emotions
Yep.
attached are totally different. So you need to also understand if you're trading demo, your emotions are not as attached as they will be if you're trading a live account. And
Yeah.
and I can assure you the best traders don't use leverage. I think I heard a quote from Warren Buffett where he said when you um I think something like you give a stupid well, it was more like if you give a random person leverage and then and time, we're going to have a very interesting combination because eventually people are going to lose that capital if they have enough margin and leverage they're trading on. So first thing first, your leverage has to be on point because that's the only thing that could protect your capital because you eventually you get emotional when trading, regardless how good your system is. Okay. So
Yep.
with that covered, we're going to start with the basics like forex or trading. Basically, um, you understand that every system has a blueprint, right? So there's
Hmm.
no system that doesn't have a blueprint or a design. So for forex, you could see we have price on the vertical, and then we have time on the horizontal, right?
Hmm.
So basically, it's just about time and price. So the market is just time and price. I remember when we had our first call last week, I told you I was going to be trading on Tuesday or Thursday, right?
Yep.
And you could see the move that started yesterday, which was Thursday, right?
Okay. You started one yesterday. Yeah. Okay.
Yeah, so I said I was going to trade yesterday, and then you could see the move that started from yesterday, right? So which was on
Yep.
Thursday, which was okay, Wednesday, Thursday. So that move started right here. And the reason why I have those days is it's still simple. Basically, we have 5 trading days.
Yep.
So we have 5 trading days. All I do is Monday is 1, Tuesday is 2, right? Wednesday 3,
Yep.
then 4 and 5. Now, the middle days are usually 4, which is Thursday, and then 2, which is Tuesday. Now, after this class, you go back and you check all your charts. It doesn't matter what charts what pair you want to check. You could check any pair, and I can assure you that most of the major movements usually will start either on a Tuesday or on a Thursday. So
Okay.
basically, those are just the 2 days we trade. Now, these are some of the parameters, so we're going to be covering fundamentals also, but I don't want to overload you with too much information. So we start basically with the days we trade and
Yep.
what particular days we're going to be trading. Because after having 5 days in a week, we also have about 365 days a year, right?
Yep.
Now, of this 365, we have about 260 of trading days, right? So we divide that into portions also. We have divided by 4, which is like trying to get the difference is this seasons we have in a year, right?
Yeah.
So I think we have 4 seasons. So the market works that way also. Basically, what I did was to trade to form a strategy from a first principle thinking point. And first principle thinking is just breaking down whatever you're trying to work on to the smallest part and then building it back up the way you feel works best for you. So now you know if trading is just about time and price, and usually we have our price on the vertical line, and then we have our time on the horizontal, right?
Yep.
So we have price moving, and then we have time also. So for every move, there has to be timing. Your trades can be random. You just can't trade any session because we have 4 sessions also. Just like we have London, Asian, New York, and then Tokyo, right?
Yep.
And each of those markets open at a very particular time. So understanding what market you're trading and what time to trade is also very important. Because if you're trading the US 30, you're majorly dealing with USD because this has to do with US top 30 companies, right? So and everything is in USD. So every news that usually will affect the USD pair will affect US 30. So once you have time down, you have price, right? You have time. Now your job is to find those points where you trade, right? Because the point of the market is to buy high, sell low. But the problem is most people can't time when to do that, right? So I'm going to do in this course is to try as much as possible to show you the easiest way to see how price reacts on certain levels, on certain days, and on certain news. Because also the market comes with fundamentals where we get NFP, FOMC, BOE. All those are also very important, which we are going to be covering. So basically we have time, price, and then we also have the news. Okay, so we're going to piece these 3 factors together and try to come up with a strategy that you get the information right now, and you're going to go back and work on a few of those things. And then because everything I'm going to be teaching you are already just more like in my head. So I developed the strategy, I know what I'm doing, but for you to get to the point where you understand what I'm doing, you need to go back to your chart and study what I'm going to be teaching you yourself. So
for sure.
Yeah, it becomes your own experience, because that's why I said I wanted people who will be very serious to take what I say and then go back, do their homework, and not just accept whatever I say just because they paid me money and then I have to teach them, right? So you need to go
Yep.
back and understand what's going on. So we have time, price, and the fundamentals down. The next thing we are going to do is we also understand the market is connected, right? Everything is connected in the market. Every other pair is connected to every other pair because there's Euro and there's USD. And then in the global market, there's always an exchange, but then those exchanges are between currencies. So each currency is affected by another currency, just like if there's a crash in the crypto market, you notice most of the cryptos are crashing at the same time. If there's a crash on US 30, you notice S&P 500 is also crashing. So there is a connection in the market that most people tend to ignore. So they end up saying, okay, I'm trading US 30, and then they only pick US 30 and put on their chart, which is not wrong in itself. Is the fact that you can't just base your assumption and your conclusion on just what's happening on this pair, right? Because this is connected to something else. And if you could find the pattern in those two, you probably will not stress much when you're trading. So I'm going to give you one pair which you use to trade the US 30. And this is what makes trading the US 30 so easy for me, because I have all this timing and I have price action. I also have my fundamentals, but I also have my correlation, which tells me if my setup is right or if my setup is wrong. So basically, you trade USD JPY. You've heard about USD JPY, right?
Yep.
And it's called the safe haven of currencies because they are like pals, USD and JPY. Yeah. So basically,
I never heard that before. Okay.
yeah, okay. Well, they call them the safe havens. I don't think I did put they're like pals though, but so basically what I do is I add the Japanese index also. So it's more like the US 30 version for JPY. Right?
Oh, okay.
Okay. So now what you want to do is to compare. You're not trying to put anything in isolation. So you add compare. If you have two charts, you just pull up your US 30 and your JP 225. And immediately this loads, you will start seeing a certain pattern, which I'll show you shortly.
Yep.
So zoom out and let's go to 1 day. And let's just pick some point and see what happens before we go back to piecing them together back to the chart. So let's start from 2020 when there was corona outbreak and the lockdown and everything, which was this crash here.
Yep.
Now if we zoom, we could see this clearly, right?
Yep.
Okay, so before we get to the next stage, I want to show you two patterns. There are these particular patterns in the market, which is the M and the W. That are usually, everybody talks about them. So you can see this M here, right?
Yep.
Clearly. Now, what most people don't notice is when it comes to the US 30, and if you could go back to backtest the US 30 for long, you notice anytime there is a setup right here, there's a M and W pattern, and there's no break. There's a break on this level. There won't be a break on JP 2500. Oh, I already locked it out. It's at the back. So you notice there wasn't a break for this right here. So there wasn't any break of this high, but there was a break for the high for US 30. Now, once you start seeing those patterns, you start to understand how connected they are. So, so this is one of the reasons why you notice there was a break here. I was around March, but there was none for JP 2500. Now, you could see this high wasn't taken out for this. I'm trying my best to bring it out.
Yeah.
But if you go back, you notice this high wasn't taken out, but it was taken out here.
Okay, yeah.
And anytime this happens, it means there's going to be a sell. Right?
So which is the JP 225? So is that happening before the Dow Jones? Does that move before it, or are these moving at the
No,
exact same time?
they move almost at the same time. So let's see what happened yesterday. So you see, yesterday there was a break of the high. Can you see?
Yep.
But there was no break here. Can you
Yep.
see that? So
Yep.
this tells you where to look. Okay, so basically what happens is there are these two patterns. Like for a sell, you usually will get a pattern like this, and then there's a break of the high for US 30, but for JP, there will no break of the high. Do you understand?
Yep.
So once you see this two, you're sure of your setup. Okay, so it's actually that easy, but I don't know if you get the concept.
I got the general concept of it, yeah. So you're like, okay, say the night before you put that trade in, your Thursday, Wednesday, you're looking at the chart, you see that it breaks through there on the 30, and then so that's your cue to be like, okay, that there's a sell coming up where it never broke on the 225.
Yeah. So
Okay.
it's actually that easy. So if you go back and do a back test for months, you notice the same pattern everywhere. So you could see for this, there was a break of this low, but this low was almost not broken. It was just
Gotcha, yeah.
right. And then if you go on a higher time frame, you see the same thing. So let's take this for example. There was no break here for the low, and there was a break of this low. So buy, right? There was a break of this high, and there was no break here. Sell. Do you see the pattern there?
Gotcha. I
So
do, yep. Wow.
very straightforward, and it seems too easy, but now you have your two pairs, you have your days to look for setup. So like I said, Tuesdays and Thursdays, right? So those are the 2
Tuesdays and
days you'll be
Thursdays, okay.
looking for this setup. And basically this is the entire strategy. It is actually very straightforward to get this once you combine your fundamentals. And that's the reason why I told you I'll be trading on Thursday. And I also have been holding this trade for like a week or so or more. I mean the trade I sent to the group. And the reason why I kept holding was because there was a break of this level, but I knew this wasn't going to be taken out. So I had more confidence in my setup, even though I had my risk parameters in place and I had everything in place. But I wasn't in a hurry to close my trade when there was a break of this level here. Because I was very certain this also confirmed the setup for me for yesterday after the news on Wednesday for CPI, where everybody was just shouting and screaming market manipulation. People just lose money and say the market is rigged. The market is not rigged. There's a pattern. You just need to find it. And once you can see that pattern and stick to it and are able to control your emotions when trading, which is where your leverage comes in, and you don't get greedy. Because I think one of the reasons why most people lose money is because they get greedy. But if you're able to keep to your risk management and then apply what I'll be teaching you then I'm sure you will enjoy this strategy because everything is here. Like if you're using the daily, you could see even at this point there was no break of this high, but there was break of the high here, right? I mean,
Mm-hmm.
just keeps repeating itself. The pattern is everywhere.
So it works both ways. So even like on the other ones you show me,
Yeah,
the
yeah,
Dow,
it does.
it works both ways. Okay.
Yeah, it
And
works
then
both ways.
so when it breaks on one and not the other, it's whichever one it is, it's showing
Yeah,
you sell or buy, basically. Okay.
basically. So it works on higher time frame from the 1 week to the 1 hour to 5 minutes. So depending on how you trade, but for me, I trade more long term. So this particular trade, this is something. This is what we're expecting on the US 30 right now, right? So we're expecting either a break of this low
Yep.
or a break of this low. So whichever happens first,
Gotcha.
then we look for
Then
either a buy or we close our current sell, which will be I think I'll be holding this for long to this point. But between
yep.
this point, there might be pullbacks and all that.
Yeah.
And I might be getting more opportunities in between, right? And if there's a change in direction or a change in trend, I'll be able to spot that because I have my levels. I have some levels
Mm-hmm.
that I'm already looking at, which this is the major level. So we have this as our major level on US 30,
Yep.
and for JP, we have this, right? So a break of this level or a break of this level. So this is how we also determine our take profits. Because
So if you get down to that level you're talking about here now and it breaks through on both, that doesn't signal a buy, does it? That would be it's
no,
only if
that
it
would
breaks
be,
through on
yeah, that would be a continuous sell.
continue. Okay. So that's okay. So cool. You can use it the opposite too. It
Yeah,
doesn't like if it doesn't break through, then that tells you something as well.
yeah, that this the combination of these two actually keeps you away from guessing because you could easily see the patterns, and so once you study them, you'll be able to have them in your memory, and then you'll be able to remember what pair you're trading and what to combine them with. Because everything, if they are both connected, then they work hand in hand, right? So there has to be a balance somewhere, and they have to find that balance because the market cannot be random.
Gotcha. Okay. So you say this works even on like the lower time frames, so like 5 minutes,
Yeah.
30 minute. You can see it there too. Show me a couple on the follow.
Okay. So, I mean, right here, um, you could easily see this. There was no break, so there was a pullback. This is on the 5 minute. I don't trade lower time frames because they can be very stressful. But here is another one here,
Yeah.
right? And then there's a break here. Basically, you could easily see even before going too far. So
Hmm.
we have this. Now, I'm not drawing this very straight, but you go back and just put a horizontal
Yeah,
line
I know
and
what
you
you're saying
just
there.
see,
Yeah.
yeah. So, but basically it works on it. But I do stick to trading Tuesdays and Thursdays because I found those days to be more consistent with the strategy. Because I've been working on this for about 5 years, right? So I try as much as possible to filter it to the best um probability or the best days to use the strategy to get the best result. Okay.
Yeah.
So basically that's just the strategy. And then the next thing we need to cover will be fundamentals. But fundamentals do wouldn't really matter because we already know what days we'll be trading, right? So
Yeah.
all we need to understand is if we are trading on Tuesday, our session will be London. So if you're trading on
Yeah.
Tuesday, it will be London session. And if you're trading on Thursdays, it will be New York sessions.
And why is that? Why not London on both or New York on both?
That's because the market is divided and there's a pattern. We covered the time and
Yep.
price. Okay. So in between those times, there are also days, and in between days, there are market sessions, which are we have the New York, Asian, and then you just piece all of them together. And since we are trading the US 30, usually it moves New York sessions on Thursday for a strong sell, and for a buy, buys are usually from Tuesdays, right? So depending on what's
Interesting.
in control of the market. So USD usually takes control of the market from on Thursday, sometimes from Wednesday. But if you go to your forex factory and you observe what news you have for the week, you notice all USD news are usually from Wednesdays,
Okay.
right? So
Yep.
there's a design to how the market works. You notice the pattern where once it's Wednesday, you start seeing FOMC, and then
Yep.
you see NFP on Friday, FOMC sometimes Wednesday or Thursday. CPIs are usually Wednesdays, unless for special weeks where they are Tuesdays for USD.
Mm.
So
Do
yes,
you trade? Do you trade in like if whether or not there's news coming like on that particular on Tuesday or Thursday? Because I know sometimes there is other news that comes out on those
yeah,
days. Like,
no,
would you still go follow this strategy, or you're not going to engage on that day?
okay, I will, but I have particular days to trade. So I already know what days I'll be trading for the next 1 year, right? So
Yep.
it's
And is it
it's
just
not.
Tuesday and Thursday, or are they just
Yes,
days?
yeah, yeah, Tuesdays
Okay,
and Thursday, but they are not every Tuesdays and every Thursdays. So even in a month, there
gotcha.
might just be 2 to 3 um Tuesdays and Thursdays, and we might just trade once or twice. Now that's because we're going long term. But if you're going on a shorter time frame, you could easily apply this. But I think the emotional stress on trading shorter time frame is very, very much. So I stay away from that. But if you decide to do that, we could have a class where we cover how to do shorter time frame trades. Okay.
Well, yeah, I definitely like to chat about the short versus the long because up to now I've just been trading short term, and I
Okay.
like I have a little confusion on what it is to even how I would adjust the lot size and things like that for a longer term.
Okay.
So yeah, a chat about that would be great at some point.
Okay. All right. I think we'll work on that then. But for now, what I need you to
Yep,
do is go back on your chart. You pull up your US 30 and the JP2 500, and you mark
yep,
every Tuesday and Thursday, which you could easily get an indicator for these separators. So you could get an indicator that indicates what day this is, so you know when you're back testing, right? So you just mark out Tuesdays
oh,
and Thursdays and do a little back test, right? So you see it for
okay,
yourself, because
yep,
this is easy for traders to come and say, so you could see this happened here, and then we had a buy, but it's a different scenario where you have to be trading live, because now we have to wait for Monday. And I'm telling you, there's going to be a continuation of the downtrend, right? Now,
yep,
it doesn't matter what I think. What matters is what will happen. Because I could have a big ego and just be ranting that we're going to have a sell, and
yeah,
I might just be lucky, and we can't
yeah,
rely on luck. So you need to go back, do your back testing yourself, and then if you
yep,
have any questions, you write them down, and then we meet again, we cover those questions, and then we try as much as possible to see how we could get all the course content into your hands so you start working with them, and then we keep
yep.
improving until you finally understand what I'm teaching. Because I don't really expect you to grab everything today, so I will give it time. Okay, so
Yeah, yeah,
just
no,
just give
it's
it a little
yeah.
time and do your back testing, and then you get back to me with your questions. And also you should also check Forex Time and their weekly updates and their news. That's what I use.
Forex time.
Yeah. You could just go to the
Okay.
website. They have a weekly
Got.
um
Okay.
so they give out weekly, so like the um
It's different than Forex Factory, obviously.
yeah, no, this is a broker. So it's not like
Oh,
a
okay.
news web, yeah, it's a particular broker, but they have analysts that are for market inside. So you just go to their market
Gotcha.
inside and then education, I think, market analyst team. So they usually I use their market analysts to get updates for what will be happening for the week. It's easier that way because too many news doesn't help. So you need to know what to focus on. So they have like week ahead. So next week, we'll be having week ahead. We can USD JPY break. So this is what I use week ahead to know what I'll be focused
Gotcha.
on for the week. So you also take
Okay.
that down. Yeah. And then you go back and do the back test. So if you have any other questions before we end this call.
Okay. Yeah. So I can set up something on this trading view where it shows me Thursdays and Fridays. There's a way I can do that.
Yeah, there should be. There
Okay.
should be.
Okay. I'll figure that out. Okay. So if it breaks through one and it doesn't break through the other,
Yeah,
that's a sign. If it's on the M, it means it's for a sell, and it's on the W, it means it's
yeah,
for a
a
buy.
buy. So we have buy, right? So usually a break on one and no break on the other. For the sell, same, a break,
Gotcha.
and then this no break.
No worry.
Yeah, so this is just what you're looking for.
Okay.
Yeah,
Yeah. Okay, that makes sense. I'll do that. I'll do some back testing on there, and yeah, I'm sure I'll have some questions there. And another thing I would like, margin is I don't really understand the way that works at all. So getting into that at some point,
yeah, we will.
I think.
Yeah,
Okay.
we will. But for the margin, I want you to do it practically, right? Because some experience, just because I tried to look for a good explanation on margin online and I couldn't find any. So the best you could do is just open a demo account with very low margin and then open one with a very high margin and see how many trades you can take on each of those accounts, right? So margin is just basically your broker lending you money. So if you have a 1 to 100 margin, it means for every $1,000 you deposit, they lend you 100,000. So you'll be able to take a position of $100,000 with a $1,000 account. That's what margin does. Leverage.
So margin and leverage are basically the same thing.
Yeah, they're basically the same thing.
Okay.
Yeah.
Yeah, because I've looked up online too, and just like you said, I haven't found anything that kind of made me be like,
Yeah.
okay, yeah,
So
I understand
yeah.
this.
You really should do it practically because when you have a demo account and you try to see how the trade works, it's actually better because eventually you're going to trade live. So why not just do do a demo test and see what works for you? Because I usually use a 1 to 3 to a 1 to 10 leverage on each of my trades. So if I'm going high risks, I probably will move to a 1 to 200 pip, 1 to 200 leverage. But that's because if I'm very sure of my trade, which I am, that will be just for um fast returns, which I'm trying to get maybe 100% or 200% gain on a single trade. But if for
Gotcha.
for a normal account, I don't advise exceeding a 1 to 5 or 1 to 3 because that way your capital is always there. And the number one rule is just don't lose money. Basically, don't lose money because once that money is gone, it's not coming back. So you protect your capital at all costs.
Okay. Okay. Yeah, that's sounds good. Looking forward to getting a little deeper into it.
Yeah. So for next week, we don't have a Tuesday we'll be trading, but we're still holding on to this sell trade. So you probably could just be looking for more sell setups. So you could have all this level marked out and just be looking
Yep.
for a continuous downtrend for next week.
Gotcha. So like for this for the week, so I'll be looking on lower time frames now to look at what's going on
Yeah,
this
yeah.
week per se.
You could go
Gotcha.
on the 30 minutes of, depending on how many hours a day you have to trade or to
Yeah.
be on the chart. Yeah. But market
Okay,
session is
cool.
also very important. So Monday, Tuesdays, you probably want to trade London. And then from Wednesdays to Fridays, you want to trade New York.
Okay. Monday, Tuesday is London. Let me just write that down.
Well, I'm recording this video, so I'll send you a link to it so you could always watch it over again.
Okay. And on Fridays, would you just not recommend trading on Fridays because of it's usually a bit more volatile, or?
Yeah, I wouldn't recommend trading on Friday unless if it's NFP, which we'll have to cover in another class. Like I said,
Okay.
we need to understand the flow of the market before, because knowing when to trade and then what price level to trade is very important. So you don't your trading is not based on feelings or but well I feel this level is too high or I feel I should sell here, right? So we need to have a checklist like this today, Thursday, even if my strategy, even if it's Thursday and there's a setup that looks like mine, but this is Wednesday. So obviously I don't expect much if it's on a Wednesday. So I don't trade regardless what's happening in the market. Not because I can't trade, but because over time I realize breaking your own rules will just end up causing you pains because the market has a structure and I tend to stick to what I know. And if I
Gotcha.
probably I might have more to add to the strategy in a couple of months, but for the meantime, this is what I'm using and this is what I've been taking my trades with.
Okay.
Yeah.
Cool. Are you working on any? Do you have any funded accounts or anything like that? Are you into that kind of thing, or are you
Nah,
just like?
I don't have any funded account because they have this strict rules where they give you a minimum days to trade, and I don't trade that way because I probably might not trade any good setup till end of this month, which is the 28th, because I'm expecting a
Gotcha.
setup on the 28th. So it doesn't work with funded accounts. They want you, and the win rate is just very low, basically, for people trading with them because they have too many restrictions, too many laws, and then too many rules that will end up just disqualifying you, regardless how good you are.
Gotcha.
Yeah.
Okay. Yeah, I'm just looking on the screen there you have up. Even there's one there, like where the big point is on the
Yeah.
J, like this. Yeah. So it's like it broke
Yeah. It
on
broke
that
a
one,
high. Yeah. And then
but
it did. So
it
it's
never
very
did.
easy. You see it from many points.
Yeah. Okay. Cool.
So just go back and then do the back test and we'll talk within the week if that's cool.
Okay.
Just let me know
Yeah.
if you have
Sounds
any
good.
questions. Just drop the questions for me and I'll get back to you as soon as possible. But for
Okay.
the meantime,
I'll
we're
get.
still selling the US 30 and also the JP 225.
Okay. Cool. I will definitely look into that. Thanks a lot.
All right. Have a great evening.
All right. You too. Bye.
Have a good night.